Good morning, traders. It is very early Sunday morning, December 17th. Let's start by looking at our last picks this week. I hate to say I told you so, but I told you so. And I've been telling you so for about the last 2 months. Let's take a look at some of these picks. AVGO. A week ago, around this very same time, I showed you AVGO. I liked it because we had this huge run up into the close on Friday post earnings. Look at this volume. You come in Monday morning, look at what the stock did. Yes, I was trying to sell it out of the money, bullish put spread on it. Lots of premium in this stock, but when you start seeing liftoff like this and stacked green candles again on massive volume, at very least, you should be day trading this. And look at that baby go. And it continued to do exactly that for almost the entire week. Go into the D1 chart, look at that rocket takeoff. Big trade. So it went up basically from about $930 to $1,130. Yay. The other stock that I highlighted at that same time was DHI. I had mentioned I like the home builders. Well, there's December 8th, Friday's close. This is the open on Monday. You can see how the stock has gone from about $137 to $150. It actually hit about $153 this last week. Big move higher. Well, we've had a really good market. Wednesday, we did a live event, which, by the way, all of you have had really great remarks about the live events. So we're going to try and do them every Wednesday around midday or so. That gives us live action to actually look at, and then we can answer all of your questions. During that live event, MDT was the stock that I highlighted, and that was on Wednesday right in here. I had mentioned how I loved this little gradual creep higher. We had a compression. We were above the AV WAP, and how I was expecting this long-term grinder of a stock to break out. Boom. Got above the 100-day moving average, and then it kept going. So I'm going to take a look at a few stocks today. We'll see what we can find. But first, we want to go in and do some market analysis. So what has the market done? Well, we had the CPI come out this week. Market largely ignored that news, and that was on Tuesday. Then Wednesday, we got the PPI, which the PPI has kind of been a letdown. The big news is on CPI, and then the cat's kind of out of the bag. So you can see how the market the first 2 days of the week was pushing higher through this horizontal resistance. A week ago Sunday, I had mentioned to you that asset managers are under allocated. This is a gap up, no volume. This is a gap up, no volume. What do you mean, Pete? Volume. There's volume once it gets on the other side of the gap, but in the gap itself, there's no volume. They couldn't get any size off there. Okay, so the index is trading higher, but the asset managers are left flat footed, and nobody wants to chase. So they've all been trained that you buy dips and you buy pullbacks. So they all start waiting for this pullback that never comes in here, and you can see how they progressively start raising their bids, and that's why the market starts leaking higher. And I've also told you over the course of the last few weeks to watch for the volume to start increasing. So this is no longer a light volume rally. This has some teeth to it. And then we get the FOMC statement this week. I also have been saying surprise favors the upside. Why? Because the asset managers need to allocate. They have a lot of cash on the sidelines. They also know that when the market is making a new high for the year, that's when money starts to come into the market. So they're going to have to place that money when it comes in. So they're going to be anticipating any cash that they have on the sidelines, they're going to want to start deploying. They also want to window dress, because the last thing an investor wants to see when they open up their mutual fund is that there's a lot of cash sitting on the sidelines when the market's making a new all-time high. They want to see that portfolio participating. And the asset managers do get FOMO. They are worried that they're going to miss a year-end rally and the next big breakout. So that has been fueling this move higher. Out of the last month and a half, only 3 long red candles, and they were instantly reversed, instantly gobbled up. Market never even had a chance to pull back, and buyers were right there to snap up that opportunity. Those are all signs that the market is going higher. So as a trader, you need to be net long right now. I don't see any major pullbacks in the market between now and year end because asset managers are still trying to allocate. But when the market starts to get a little bit ahead of itself, you can see how the EMA 8 is trying to catch up here. It still hasn't caught up. So can we expect a little bit of consolidation, a little bit of compression in here? You bet. Would I expect this breakout to hold? You bet. So a couple of things can happen. Either the market pulls back or it just grind, sits right here treading water while that EMA 8 catches up just like it did right here. So what traders oftentimes do is they'll get all excited that this is such a fantastic, powerful rally in here. Oh my God, I'm making money hand over fist. They get over leveraged on short-term long positions. I'm talking about weekly options. I'm talking about 0 DTE. I'm talking about stuff where time premium decay is fighting you the entire way. Well, those positions are going to expire worthless, and then you're going to be left holding the bag, and then whoosh, there goes the next rally. Gee, I wasn't on board for that. Long-term call options that are deep in the money with a high delta, you don't have to worry about. You got plenty of time. You can ride out these compressions. And guess what? We just had another big run up. So if you're betting that the market's going to make a new high this week, probably not going to happen because this EMA 8 needs to catch up. So there are also a few different ways that traders structure their trades. Personally, I felt that this is a move that's going to last for quite a while, probably well into Q1. We've had material changes. We've got decent economic growth. We have inflation starting to come in. We're even starting to see some decent growth in China. They released their retail sales and industrial production this week, second largest economy in the world. Important. So you've got decent economic growth globally. Jobs have been really nice and strong. That hasn't changed. And you've got a Fed that's paused, and they said maybe in 2024 we're going to get 3 rate cuts. I'm so used to saying rate hikes. Now I've got to shift to rate cuts. Well, that would be fantastic for the market. So the macro backdrop has changed. Long-term money, asset managers who don't care about the wiggles and jiggles that happen this next week are putting money to work. And we want to lean on that longer-term money. And that's why I feel that there won't be any big pullbacks, but we also aren't going to be off to the races because we need to compress. We need to digest some of these gains. And then over the course of a few days, you'll start to see the bid grow. What do I want to see right here? I'd like to see this long green candle preserved. I want to see the open of that long green candle, which is roughly 464.50 on SPY. I want to see it preserved. That's also the EMA 8, which is not really a significant support level. To me, it's more an indication of the market getting overextended. You can see how this whole way up, right in here, you run up, you get way ahead of that EMA 8, compress, it starts to catch up, and then you get your next leg higher. So I use it for illustrative purposes primarily. We can zoom out, take a look at those longer term trend lines, see where they come into play. That is a nice trend line breakout. This is a very major high plus trend line. Gee, is that resistance? Can we break through it? Well, the one thing about ascending trend lines is that they are not as strong, meaning that they are more easily breached to the upside than a downward sloping trend line, and they are not as reliable. So when you get a breakout to the upside like this breakout here, it's not going to be as good as when you get a downward descending high minus H minus trend line like that that's broken to the upside. This I pay more attention to. These breakouts are nice. They're kind of confirming. They show us some temporary resistance levels. So we'll see if this resistance holds. But I'm not worried that, gee, the market's not going to be able to get through that level right there. I think the market has enough of a tailwind. I think it's got enough good news to push through it. It's just going to take time. So this upcoming week should be relatively quiet. A question that I get all the time is, should I be hedging my positions? Well, first of all, if you're worried about the market, which you should not be if you're long right now, you should not be worried about the market right now. But if you ever find yourself in a situation, let's say back in here when the market's really pretty volatile and heading lower, that you need to hedge, I don't like to hedge. I like to reduce my long exposure. Very easy to do. Then you're in cash. You have complete flexibility to do whatever you want. Oftentimes, the hedges create more problems than they solve. But if you're in cash, you're objectively evaluating the market and you don't have any emotional attachment to your positions. You get into another situation where some traders tend to be very, very short term. So they're either day trading or they're maybe doing some credit spreads longer term. Some of them are doing some call debit spreads or put debit spreads shorter term. So it really depends on how you like to position yourself. You could have traded call debit spreads in here, very short term, taken your money, paused for a little bit to see if the market's able to continue higher. Okay, yep. Start doing some more call debit spreads in here and then focus on your day trades and then largely go to the sidelines when you get these big blow-offs like this. And then now you're just waiting for the next opportunity. That's one approach, very short term. Right now, given the market backdrop, we have an opportunity to do some longer term trades. So I like being long swing trades on a longer term 2 or 3 month basis because I feel the market's just gonna continue to go higher, leak higher. I'm not looking for anything explosive. I'm just looking for a general grind higher. But there are gonna be moments where I need to lean on my shorter term trades to hedge my longer term position. So if the market does get into a situation in 2024 where I'm having to short the market intraday, I have no problem with that. If it looks like there's a more material technical breakdown and I can do some overnight shorts, I'll do that. But in doing so, I'm kind of using the longer term bullish swing trades as a core position for a 3-4 month time horizon, and then I'm using my shorter term market movement to take short positions on. And when the market does finally roll over and crack down and it has that ugly day or that ugly 2 days, it's going to be very easy to short because those shorts are going to be giving up these recent gains, especially the stocks that have been dragged higher by their hair, the laggards, the dogs. I guess since it's a pet supply company, I might as well put up Chewy because it has been like one of the weakest stocks. Stocks like this that are just getting dragged higher by the market. Well, these are the ones that are just all boats rise with the tide. Well, these are being dragged higher, and those are the ones that are going to crack down first. So there'll be great shorting opportunities there. There'll be some shorting opportunities for stocks that have gotten overextended as well. but those moves on those market pullbacks are going to be sustained intraday. So it'll be very easy. A 5 minute chart might look like this, tick, 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 tick. Very easy to get behind that type of move. Well, that's exactly what you start doing to hedge your longer term swing positions is intraday. You can take some shorts. Ultimately, what we'd like to see, because the market doesn't go straight up or straight down, is that while we're taking some of those short term bearish positions on, you are looking for support because given the market and given your overall market bias and your overall bullish market opinion, you know that dips are going to present opportunities for you to sell out of the money bullish put spreads. There are going to be opportunities for the really short-term traders to do some call debit spreads. So that's how I like to trade right now. I like putting on some longer term in the money deep calls with a high delta. Give myself 3 or 4 months on some of these laggards that I feel are going to be lifted higher with the market. Good companies, consumer defensive type stocks that I've been highlighting. Stocks like CVS, ConAgra's been another one, food producer. I think Pepsi actually sets up pretty well also. So those are the types of stocks I'd be looking at. Excuse me, Pepsi still needs to get through some resistance points right here, and you can see nice long bullish candle here and almost a bearish engulfing candle. That's a warning sign. That tells me, hey, look at me. I'm going, I'm going, I'm going. Blam! Not so fast. So it's still in this compression until it can start to get out of that compression and maybe get through this 100-day moving average, the blue line. Okay, then I start becoming interested in a company like Pepsi longer term. Zoom out, you can see, it's got plenty of distance to travel. So that would be the type of company that I'd be looking to do a longer term position on. And then you just use shorter term market movement to offset some of those longer term positions if we get those pullbacks. But buy the dip, buy the dip, buy the dip. This is one of those times when you want to be conditioned to buying dips. Super short term trader, you got to wait for the dips. When you get the dip, you get the support. Okay, you reload. Ride the market higher. When it hits resistance, take your profits, go to the sidelines. It's certainly one tactic that I've used. So that's just a little bit of background on how you can trade. It's really a personal preference. There is no right and no wrong. There's only what makes sense to you and what fits your risk profile and your comfort level. So I like the market. I think that half of this long green candle is likely to be tested this week. This EMA 8 is going to catch up. I believe that we've got a shot to make a new all-time high this year in 2023. We'll see if it happens. We're not that far away, so this is not like some outlandish forecast. The market's going to have to continue to float higher. There is no incentive for any asset manager to sell right now. They want to mark those portfolios up into year end. So I'm expecting a gradual grind higher, gradual float higher. So we're going to be taking a look at some trades. I will say that on a day trading basis, it's going to be tough sledding, folks. We're going to see compressed intraday ranges. It's going to be nasty, ugly stuff. Nothing going on. You could hear a pin drop. And then one day, out of nowhere, the market's going to find support and it's going to continue to grind higher and higher and higher. It's going to close on its high. And all of a sudden, one of these sleepy little days is going to turn out to be a 30 or 40 point S&P day. A really nice day that you wish you had gotten long on, but you couldn't predict when that day was going to happen. And there's really not a lot of news between now and year end either. Excuse me. The patterns that you have to be leery of are these gaps up to a new relative high. We don't have to worry about heavy selling during the course of the day when the market gaps down. But we do have to worry about it when the market gaps up. What? What are you talking about? That makes no sense at all. That I need to be worried about selling when the market gaps up? What? What kind of nonsense is that? Who's ever heard of such a foolish thing? New relative high, gap reversal. 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 Okay? Now you get the message. New relative high, gap reversal. We are not going to see heavy selling when the market gaps down unless there's something catastrophic that happens globally. Not seeing that at all, not even remotely. Usually the market opens lower. So this was actually a gap down from the close. Rallies all day. Gap down from the prior close. Rallies all day. Little lower open from the prior close. Rallies. We can expect that these lower opens are going to find support and rally and fill the gap and close near their high. That's what a bullish market does. So, you show me a gap down in this kind of uptrend? Thank you very much. I really appreciate it because this is going to give me a chance to find that relative strength, give me time on the open to get my game plan together, and I'm going to have a good entry point. When we have a gap up like this, let's take a look at the price action. Right here, this is our gap up after the FOMC. Couldn't get higher. Okay, we pull back, we fill in half the gap. Try it again. Nope, that resistance is going to hold. And now the market finishes about where it started the day with a red candle. So these gaps up are going to attract profit taking. Those have the opportunity to gain momentum. So long red candle, long red candle, long red candle. Okay, now you're filling the gap with ease. You've got this downward momentum that's been established. Buyers have a tendency to pull bids when they see that happen because that momentum is very strong. And then the market leaks lower, and eventually you get sell programs into the close. I can show you a ton of days like this. Now, we haven't seen them much recently, but here's a classic example. This is where you're going to see selling. So you get this gap up, long red candle, long red candle. Well, buyers are going to be on their heels. They're not going to be out there bidding aggressively. And then you get this leak lower, very little lift off the low of the day, lower highs, programs, see you later. But this was just one day. There's one rare red candle that we had, and I believe we just looked at that day right there. So, and that's a gap up. There's the close. There's the next open. Watch out for gaps higher. Do not chase. Okay? So, gap down, beautiful. Let it find support. Come in, start bidding. Let's find some stocks. Let's take a look at some stocks and keep moving forward. So at this juncture, what am I doing? I'm looking for still some opportunities to sell out of the money, bullish put spreads on strong stocks. I'm looking to buy outright stock that looks like it's going to continue to move higher. I don't mind hanging onto it for a week or 2 weeks. So those are the strategies I'm looking for right now in terms of selling out of the money bullish put spreads. I will tell you this. It is tough sledding. And this is why. This is VXX, okay? This is like VIX. It's like the VIX. Well, you can see how it has absolutely plunged. And that's because there's not a lot of uncertainty in the market when it is grinding higher. The other thing is that a lot of these option premium sellers are also institutions. And these institutions don't just trade their own accounts, they execute for large asset managers. And when on their books they see asset manager A, B, C, and D with monster buy orders, like we got tons of stock to buy, you can take a week to work these orders. We want to have you try and give us a VWAP over the course of the last week or two. So you've got all this money that's coming into the market. Well, these institutions can see that, and they know that the chance for a big market decline with that type of buy side is minimal. And they start selling that premium because they're not expecting any market volatility. So that means option premiums get dirt cheap. You can't sell any out of the money bullish put spreads. You got to go too close to the money, and the risk reward is simply not there. So into year end, I wouldn't suggest that strategy. We need a nice little market dip, and we'll probably get it sometime early in 2024. But for right now, that's a strategy that's probably not going to work because you're just not going to get the premiums that you need. So it is a good time to buy longer term, deep in the money call options. They will also be relatively cheap for the reasons that I just showed you. Or you can just buy the stock and let it float higher and make money that way as well. So that's what we're going to be looking for. We're just going to be looking for some strong stocks. I don't know that I'll be able to associate any option strategies with it. And I'm going to go in and take a look at some of the stocks. Actually, I looked at CRM. And I like this. I like this stock. This would be a stock that I highlight. You can see here how it's got this horizontal breakout through this resistance level. Earnings here, gap up. Okay, nice. And now it's been compressing. See these yellow dots in here? Compress, compress, compress. Well, what does that tell me? Just like when I showed you MDT during the live event on Wednesday, that compression in this instance tells us that buyers are there. If this were a fake move, it would run up, blam, 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 fill that gap, sell that pig, fill it instantly. That's not what happened. Now you start to sense that this is a legitimate move here. And that support has been held, held, held. In fact, everybody that wanted to buy there is now worried. Uh-oh, there's other people looking to buy. So I got to get a little more aggressive, and I raise my bid. Uh-oh, look, we're above AV WAP-E now. I better get a little more aggressive. So they keep raising their bids. Now you've got a series of higher lows. Yes, I like CRM. Horrible options. The options are super illiquid. I just took a look at them. In fact, they trade in $10 increments if you go out a few weeks. Well, I'm not going to be able to do any kind of put credit spreads with that kind of market. Even call debit spreads are going to be difficult. But the fact remains, I like the stock. So buy some shares. I think CRM is going to continue to move higher. I'm going to show you a quick search that I ran, and we'll find a couple of stocks there, and then we'll conclude our session. So when people are looking for stocks, they don't know what they're looking for. Well, how in the heck are you going to find something when you don't know what you're looking for? So when you're flipping charts and you see a pattern that in your mind goes ding, 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 I really like that chart. I don't know why I like it, but I really, really like it. Then take a deep breath and step back. Put all the indicators on there that you like and figure out which ones are the key to that pattern. Some of them will be irrelevant. Some of them will be very, very important. And so you need to quantify what the heck it is about that chart that makes it look so good and so compelling. And you know them when you see them. So start decoding that. Figure out what those variables are that will help you find that pattern. And so, for instance, right now, I'd like to see other companies. When I see this, I'm like, I like this. Earnings after the close, stock gaps up, stock is able to hold the gap beautifully, it's above AVWAP E. Huh, compression should have another leg higher. Hey, I like that pattern. MDT, I showed you this Wednesday, gap up, tick, 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 higher. Hey, that's constructive. The bid is increasing. Buyers are out there. This stock is going to get ready to launch, and I want to be in it. So let's run a search. I'm going to show you one search. The possibilities are infinite, and it's so dang easy to do with Option Stalker Pro. You can do it with Option Stalker as well. All these search variables are available to you. So what do I want? I want to have good option liquidity. So as long as I stay near zero, I can even go -2 on this one. I'm going to have pretty decent option liquidity. I'd like to have a compression. Okay, so the stock is coiling like a spring, waiting to release. Good idea. I'd like to have the stock above AVWAP E. Okay, I've seen that in comments. Stocks above AVWAP E. It's in a compression. That's interesting to me. Hey, what about a stock that has released earnings in the last month? So I mark earnings date previous, November 20th to December 17th, and I click scan. Lo and behold, there are only 5 stocks for us to take a look at. One of these is very likely to be our pick of the day. So, AEO. Well, AEO, big gap down right in here, post earnings. I don't like that, even though it did rebound sharply and it made a new relative high. When I look at this, yes, it's in a compression, couple of long red candles off the high, and we're back on that resistance. So this looks very toppy to me. No, I would not be wanting to enter AEO right now. EILI, longer term downtrend. Woof. That's what I've got to say about that. Bearish earnings reaction dragged higher by its hair. Market up. Huge stock trying to find some support in here. Compressing right in here. Now a stock where this would be a fake move lower, buyers would be in there going, oh, I will buy the heck out of this all day long at this price. Long green candle, long green candle, long green candle, long green candle. We're not seeing that. Nothing even close to that. This is probably going to set up as a good short when it breaks below AVWAP E. But I'm not looking for shorts right now. There's no reason for me to look for shorts right now. Do not go out picking market tops. That is the easiest way to blow up an account. And I've seen it hundreds and hundreds of times over my 30 years. It's ugly. IQ, chop, 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 chop. There's nothing here for me. No, thank you. Hey, things just started looking up. We got this nice horizontal breakout. We got this earnings after the close here. Boom! Look at that liftoff. And the stock is finding support. And we have higher lows. And we are in a compression. Nice, 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 nice. Yeah. Now we're starting to get somewhere here. We've also got this horizontal resistance, broken to the upside, so that is also support. So we're looking at that as was resistance, now support. Put up the cross here very quickly. Was resistance, now support. So that's one support level. Zoom in a little bit here. And we've got a VWAP-E is another support level. What did the stock do when the market pulled back the last 2 days? Thursday, Friday. Thursday, Friday. New relative high. Stock holds the breakout. Stock doji holds the breakout. Closes where it opens. Typically, on these dojis, you're going to see a move lower or a move higher because that's temporary equilibrium. In this case, I think we go higher. I like PATH. See if we got any trend lines coming into play. A couple of them right here. Zoom out. See where they come in. Not worried about that because it's very close to the current day. So we've got maybe 10 days in between here. A trend line I would like better would be one like this. It comes in here and it's out of range now, so you're not seeing it. But yes, that would be 2 longer term connection points. So not too worried about those trend lines. I like it. This is, in all likelihood, going to be your pick of the day. But I have one more stock. PDD. Oh, looks good to me. Really nice uptrend in a compression. Big gap up. Earnings before the open. Higher lows above AVWAP-E. So this also looks good, and there you'd be looking at a 135 put that you would need to sell. Well, a 135 put is $13 out of the money. I've shown you what option implied volatilities have done recently. They are dirt cheap, so put credit spread is really out of the question. This is going to set up well for buying maybe in the money call with a January expiration, but we got to go longer term because we don't want to be exposed to time premium decay. So let's see if we can buy anything decent. I mean, it might have to go down to the 135 strike. January 19th, 135s are 1575, and those are in the money by about 1330. So yeah, you're going to be paying about $2.50 over parity. But the stock is a mover. So that would be one way to trade PDD. Or just go buy the stock. If you're looking for a cheaper stock, PATH. I really like it. Let's zoom out one more time on this because, yeah, this stock has been pretty high. Not recently. Let's see how far back is that. Okay, that is May of 2021. It's been as high as $82. So, yeah, if this has the right type of news, it could go very nicely. PATH. That is going to be your long pick of the day. I plan on doing a video on Wednesday. Could you sell a 2250 put on this naked? Yes, I would like a trade like that. I would like to stay inside of a month, January 19th, 2250s, 30 cents. I'd need to get about 45 cents for that. So a little light on the naked put side, but that would make me long somewhere around 2220 in this gap right here. It's not going to generate the kind of income that I would like, given that I've got to hang on to that position for an entire month. So not one that I would be jumping up and down about. I just like the stock. I think you can own the stock and look for at least $2 or $3 worth of upside, maybe even more. Depends on what this next leg higher looks like. But the stock has been able to break out when the market's pulled back a little bit. It's compressed. It's held all of its gains. Check box, check box, Checkbox, checkbox. That is how we found these stocks. See how easy? You just have to know what to look for. Market first. Love it. Big run higher, probably going to compress for a little bit, looking for continuation to the upside into year end. I like being long on a swing basis. I like even going out a couple of months, and then short term, I'm going to be trading. If I see a couple of down days, I'll day trade from the short side. I'll offset some of the losses on my longer term swings. As we get that little market pullback, I am salivating because I know that that pullback is going to find support, and that is going to present me with some opportunities to get back on that trend and to trade short term on the long side as well. That's how I'm approaching it. Folks, enjoy your weekend. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.